Bismillahirrahmanirrahim. Assalamu alaikum warahmatullahi wabarakatuh. Dear students, this is chapter number 3 of your course Intermediate Accounting, and in chapter 2 the subject is, the course title is the Accounting Information System. We will follow the same book which is written by KSU, called Intermediate Accounting 11 edition. This is my name, Zainullah, and this is my email address and phone number. So if you have any questions, so you can ask me through my mobile number, or you can use my email address to send me an email. Let's to start from the course objective, or let's to start from the chapter objective, the Accounting Information System. Dear students, at the end of this course you will be able to elaborate or to explain the basic terminologies of the accounting. You will be able to explain the double entry system and the rules for debiting and crediting. You will be able to explain and identify the accounting cycle and the steps in accounting cycle. You students will record transaction and journal. You will post these transactions from journal to ledger, and finally you will prepare a trial balance. Also, dear students, you will learn and you will elaborate the reason for preparing adjusting entries. You will explain about how to prepare the closing entries, and finally you will be able to explain the inventory accounts and recording and adjustment of this inventory by using perpetual and periodic system at the end of period. And you will be able to use the 10 column worksheet for preparing adjusting entries for closing the years, and for understanding about the income of the company, net loss and profit of the company. Let's to go from the basic of the accounting. Dear students, accounting data is represented by following relationship among the assets, liabilities and owner equity. So dear students, if you see here this slide over here, you will understand about the accounting equation. That accounting equation, or it's also called the balance sheet equation in other words. So this is having three accounts, three major accounts. The first account titled the assets account, and the second account is also titled this is the asset account. And this side of the equation, which has been divided through this red line, in this side of the equation we have the two other accounts, which are called liability and owner equity account. Dear students, always when we are making the equation, so both the side of the equation must be equal with one another. We should make equal both the side after recording the transaction of UD transaction. So if you see, dear students, over here the equation, this is a transaction that Ahmad invested cash 10,000, building 50,000, and furniture 40,000 in a business. So record this into the equation. So if you see over here, we have the asset side, and within the asset side we have recorded about the cash 10,000, we have recorded about the building 50,000, and we have recorded about furniture 40,000. This is one side of the equation. But when we add all of these three, it is equal to 100,000. But the second side of the equation, which are the owner equity and liability side, we also have the same amount by the name of Ahmad Capital, and it is equal to $100,000. So both the side of the equation must be equal at the end of each transaction. Data the accounting या the हिसाबातो इक्वेशन या मसावत हम वेल शि या बैलेंस शीट इक्वेशन چې په دې کې یو طرف ته اسټس دی او بل طرف ته موږ سره لایبیلیټیز او اونر ایکویټی ده. اسټ چې د ډیر سټوډنټس تاسو ټرانزیکشن ته په کتو سره باید هغه ریکارډ کړئ. لکه موږ دیس ګوس یو ټرانزیکشن لرو چې احمد انویسټډ کیش 10,000, building 50,000 and furniture 40,000 in a business. So this Ahmad invested cash, no cash مو دلته ولیکلو دا اماونت همدارنګه بلډینګ او دا قیمت مودل ته ولیکلو او فرنیچر مودل ته ولیکلو ولې چې درې واړه چې دا د ایسټ اکاونټ دی یعنی کیش بلډینګ او فرنیچر ایسټ اکاونټ دی خو بل طرف ته دا پیسې چې دی د احمد سرمایه ده ناغه په دې بل سایډ کې د مساوات ولیکلو کله چې موږ د دې درې واړو اماونت جمع کړلو نو دا د 1 لک روپو برابر شو دلته د احمد کیپټل هم د 1 لک روپو برابر دی نو ایکویشن یا اکاونټینګ ایکویشن موږ ته هم دغه ښیي ډیر سټوډنټس وروسته د هغې څخه موږ د اکاونټینګ ځکه موږ بیسک ټرمینالوژي باندې خبرې کوو سو ډسکشن از اباوت د ډبل انټري سیسټم So accounting is having double entry system and it is the basic for the accounting. Accounting base is on the double entry system. Accounting چې په double entry system باندې base لري یعنی دا غیم د دین هغه base یا بنیادی باندې جوړ شوی دی په double entry system باندې. Double entry system چې همیشه two side effect د transaction ریکارډ کوي یا سب کوي یعنی معنا دا چې ترانزیکشن باید په هم په ډیبټ سایډ کې سیم اماونت ریکارډ شي او هم باید د ترانزیکشن په کریډټ سایډ کې سیم اماونت ریکارډ شي او دې ته د ډبل انټری سیستم هغه رولز یا کنونشنز ویل شي نو په موږ په اسانۍ سره ویل شو چې اکاونټینګ انفارمیشن از بیسډ آن ډبل انټری سیستم ون تھنګ یو اکاونټ چې دی د ارینجمنت اف ترانزیکشن دی نو دا چې د اسټ وجنا یا د لایبیلیټي د حسابوالي وجنا یا د نورو الیمنٹ چې هغه ریوینیو ایکسپنسز او اونر ایکویټي دي دغه په اساس باندې دا کولای شي چې اضافه او کم شي نو په اکاونټینګ ایکویشن کې مونږ د هر ترانزیکشن ټو ساید افیکټ یا دوه طرفه اثر چې د مونږ ثبت کوو یا ریکارډ کوو د هر یو ترانزیکشن او دې ځکه چې د مونږ باید هغه اصول د ډیبټ او د کریډټ په نظر کې ونیسو کوم چې سیټ رولز د لپاره ډیولپ شوي دي یا ډیزاین شوي دي Dear students, two-side effect munga sanga malumole show how to understand about the two-side effect of the transaction. So see over here how we can understand about the two-side effect of transaction. Okay, dear students, now we will explain about the double entry system here in this slide. What is double entry system? We have already explored that. The double entry system is the system where we will record the two-side effect of the transaction. So in simple we may say that in double entry system the two-side effect of the transaction will be recorded. We have already done it over here. If you see, so we have discussed it over there that two-side effect is recorded in double entry system of the transaction. Let's to have an example of the transaction and we will find the double entry effect in that transaction. So see, this is a transaction that company bought furniture for cash. So see what happened in this transaction and what is the two-side effect in this transaction. So see, dear students, in this company the company purchased bought furniture for cash. So the first thing that we may find is the increasing in furniture account, and second we will have the decrease in cash account. Two activities happened over here in this business. At previous there were no furniture, but now the furniture account increased. But another side we had cash in the business, but this cash decreased. So this is what we may say that there are two cause effect in this transaction, for the company. So our cash account is decreasing. So dear students, we may say over here that increase in furniture is it is an asset account. When asset is increasing, we should record that at the debit side. So it is a debit record. So one effect, the effect is on debit side. But cash is also an asset account. But when it is decreasing, so we should record it at credit side. It is a credit record. So see, dear students, there is one effect on debit side and another effect is on credit side. That's why we may say two-side effect of transaction. Let's to take one another example. Like for example, the company took a loan in cash. Company has taken loan, but this loan is as a cash. So see, dear students, there is again two accounts. One account is the loan account that the company has taken, which are called account payable, and another account is the cash account. So see, dear students, that's the loan is account payable. That's like account payable, and account payable is having relationship with the liabilities. But another side, cash is an asset account. So keep in mind that this liability has increased upon company. Liability increased upon company. But another side, the cash, which is an asset account, it also increased for the company. So increase in liability should be credited, so you will record it at credit side, but increase in cash should be debited. So see, dear students, you have found two side effect of transaction over here. There are two side effect of each transaction. At the first transaction, when the company purchased furniture, so there was a debit entry and cash was a credit entry. But when the company taken loan, so loan was a credit entry and cash increment or increase in cash was a debit record. So this is what we may say the two side effect of transaction. I hope that you have understand about it. Okay, good. Dear students, the double entry system is focusing on the equality of each and every account or each and every transaction. Like for example, we may say that a company, consider this is a general journal. Let's to draw a general journal. This is date column, and this is, like for example, the description column, and this is ledger folio, this is debit record, and this is credit record, the standard format of general journal. Now, dear students, consider that we have, like for example, the date column over here, date. This is the date, and then we have, like for example, description. We have, like, dear students, a reference number, and then we have debit record, and then we have the column for credit record, credit. So see, we will take the same transaction. Company purchase furniture. So consider that this is January 1st. The company purchased furniture, so furniture account increased. Consider that the amount of furniture was equal to 10,000. But at the same time, the company purchased this furniture on cash. So the cash account of the company decreased. So when there is a decrease in the cash account, so we will record this at the credit side because asset of the company decreased. So see, we have 10,000 over here and 10,000 over there. This is what we may say the equality of the transaction. So dear students, both the side of the accounts, which are the debit side and credit side, both of them are maintained equally. So that's why we may say the double entry system will focus on equation or equality of accounting when we are recording each transaction. So this is like an equation. Or if you are interested to understand a bit more, so let's to use the second transaction, or let's to record the second transaction. The company purchased and the company took loan as cash. So cash account of the company increased, and the amount of that is equal to like for example, consider 5,000. But another side, the company will pay this as a liabilities. So liability of the company also increased. So this liability in account is also having the same amount, which are 5,000. So see, again both the side of the transaction or the recording is equal. So accounting, when we are recording transaction in double system or a double entry system, so the focus of accounting is on equation of each transaction. Dear students, here in this slide you will know about the rules for debit and crediting the account. When there is an increase in asset and expenses, so we will record this in debit record. But when there is an increase in liabilities, owner equity and revenue, we will record that at the credit side. So let's do we have already discussed about it, but let's to explain you again. Dear students, we have the 5 major accounts. The first one is called asset, the second one is called expenses, and we also have, like for example, the revenue account, we have the liabilities account, and we have the owner's equity account. So the rules for debit and credit: when we make the account as debit record, and when we can make the credit entry for this, what are the rules for at credit record? So dear students, see, when asset account increasing, so we will record this at the debit side, okay, and when it is decreasing, we will record it at credit side. This is one. When the as the revenue account, the liabilities account and the owner equity account increasing, so we will record that at the credit side. But when it is decreasing, we will record it at the debit side. So this is decrease, and this is the increase in accounts. So now let's do write down here the rules. If the account if the asset account increases and expenses within the business increases, we will debit it. But when the same asset account decreases, when the same asset account decreases, we will record it as a credit entry. And when it is like for example, the expenses account decreases, we will record it the credit side. But these three, when revenue account, when liabilities account, and when owner equity account decreases, we will record it at the debit side. But when these three account within the business increases, like for example, revenue of the business increased, liability increases, or the owner equity account increases, so we will record that as a credit side. So here we have discussed about the conventions or the rules for debiting the accounts and for crediting the account record. So I hope that you have understand about it. These arrows will show you about the upward arrow shows the increase, and downward arrow shows the decrease in account. This is like the basic equation rules, like when asset is increasing, we will record it at debit. When it is decreasing, this minus mark shows you about the credit. Decrease plus shows us about the increase in so asset, when it is increasing, we will make it debit. When it is decreasing, we will make it credit. The same way liabilities, dividend, revenue and expenses. So we have already done about these things. Again over here, dear students, this is the same discussion that I have shown you students in this part of the document. See dear students, when balance increases, so there is what will happen, and when balance is decreasing, so what will happen. So see dear students, when the asset account increases, so this is a debit card. When asset account increases, it is a debit card, and this debit card is for the increase in asset. But when expenses account increases, so it is again a debit card. So we will record this at the debit side. But when the liability account increases, so it is a credit card. When the owner equity account increases, so then it is a credit entry. It is a credit card. And when the revenue account increases, so dear students, it is again a credit entry. So this is what the rules for crediting and debiting of accounts while it is increasing. Now, what is the rules for credit and debit when the account is decreasing? Like for example, when the asset account decreases, so we will record that it's the debit side. But when the expenses account increases, we will record it as a credit record. When asset account decreases, we will record it the credit side. When the liabilities account decreases, we will record it at debit side. And when the equity account decreases, we will record at debit side. And when the revenue account decreases, we will record it debit side. So this was the rules for debiting and crediting in this slide. What we have already done over here, you can easily understand from this portion that we have discussed over here. Okay dear students, next discussion is about the ownership or the equity structure. It's also important that we should know that what is the structure for owner equity, what are the components which are involved in the owner equity. Dear students, see, we have the owner equity, but this owner equity is increasing through net income. If we add net income with it, so it is increasing, one thing. And second, owner equity is increasing through the investment by owner. And I mean, if we have these two situations in owner equity, so at that time the owner equity is increasing, and I mean there is a positive impact on owner equity. Like for example, if we earn money, so this will increase the owner equity. And if owner invests money in business, so it will also increase the owner equity. So these are the two things which will have a positive impact on owner equity. But let's discuss about the negative impact on owner equity. So net loss within the business, net loss if the business is doing net loss, or if the owner withdraw their capital, so these two will impact negatively on the owner equity. This means that these two things, which are the net loss and second, which are the withdrawals by owners, these two will impact the owner equity negatively. So simply, dear students, we may say that owner equity is affected by two things. First, we may say that positive impact is through net income, and the second positive impact is through investment by owners. But negative impact is through net loss and also withdrawals by owners. This will affect the owner equity negatively. Okay, good dear students. So here you have understand about the owner equity structure of the organization. Now let's move towards the accounting cycle. Let's explain about the accounting cycle. So accounting cycle are the steps which are involved in the accounting cycle. Let's explain about that. So there are some steps which are involved in the accounting cycle. The first step is we should analyze the transaction. The first step is in accounting cycle, this is analysis of transaction, and we will analyze the transaction. This is the first step, analyze transaction, one step. Second step is journalize the transaction, and I mean record this into journal. This is the second step of the accounting cycle. The third step is post the transaction to ledger, and we will prepare the ledger account. The fourth step is third step is ledger. The fourth step is preparing unadjusted trial balance. Unadjusted. So here we will prepare unadjusted trial balance, and then we will prepare the we will adjust the journal entries. Journal entries adjustment is one of the step in the accounting cycle. Then we will prepare the adjusted trial balance, and then we will prepare the financial statement, and finally we will prepare the closing the years. We will close the journal entries for the year, and then we will have the post closing trial balance. So these are the steps and the accounting cycle that we may use while recording transaction or while preparing the financial statement. So dear, once again, the first step is the analyzing the transaction. Second step is journalizing the transaction. Third step is preparing the ledger accounts. Fourth step is to prepare the unadjusted trial balance. Fifth step is adjusting journal entries, and then the sixth step is adjusted trial balance. Finally preparing financial statements, and then we will close the journal entries for the year, and we will make the post closing trial balance. These are some of the major steps in the accounting cycle. I hope that you have understand about it. Here dear students, you will see the accounting cycle steps in term of graph or chart. See here you will see the accounting period is beginning over here, and when we begin the accounting period, so our first step is, we have discussed over there, that it is analyzing transaction. After analysis of transaction, we will record this into journal. Then we will post this transaction to ledger accounts, and then we will move towards the post the transaction to ledger. The fourth step is we will prepare the unadjusted trial balance, and then we will prepare the adjusted journal entries, and finally we will prepare after the adjusted journal entries, we will move towards the next step, which are the sixth one, adjusted trial balance. Finally we will prepare financial statement, and then we will close the years, and after closing the years we will prepare the closing trial balance. So this is what we may say the like for example the accounting cycle, and then we will again start over the next year. We will begin the period and we will end the period with these all steps. So this is what the accounting cycle for your further information in term of graph. Okay, so dear students, how we can do the adjusting journal entries? What are the steps? What are the adjusting journal entries? How we can explain it? That adjusting journal entries is the following entries. So let's to see, dear students, we will use the adjusting journal entries for three purposes. First of all, we should recognize the revenue. This is our first step, and then we will have, like for example, the second we will use this for the matching expenses or for the matching purpose. for the matching purpose, and matching the expenses with the existing revenues, and finally we will preparing the adjusting entries. So these are the three adjusting entries which is needed for these three things. Adjusting entries and journal is like needed for the following three purposes. The first purpose, we want to recognize the revenue, one step. Second step is we will match expenses through it during the year, and finally we will do the adjusting entries. These are required for the financial statements to be prepared, and here we will matching the expenses with the revenue that it has generated, and here we will recognize revenue for the period, and have we used or have we collected this revenue in the same period, one thing. Second, the matching expenses mean and what revenue we have collected is it matched, it is generated by the help of these expenses, and adjusting entries are required every time for the preparation of the financial statement. So for these three purposes we are making the adjusting journal entries. We have discussed earlier that we will learn in this chapter about the adjusting journal entries. Dear students, in the adjusting journal entries we have the unearned revenue and accrued revenue. Two things are over there. One is the in recognizing revenue. Recognizing revenue is done through this step is done through three things. One is the adjusting unearned revenue, and the second is accrued revenue. What does adjusting revenue mean? Adjusting revenue mean that we have received the revenue in cash, and we have already received the cash, but we have not paid the expenses or the amount. So for this purpose we will go for the adjusting entries.